Hello, everybody. Welcome. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are down today. Dow Jones is down 0.2%. NASDAQ down slightly. S&P 500 down 0.1%. Russell 2000 down 0.8%. Oil prices are up 2% to $64.47 a barrel. Yield curve is pretty much unchanged. 10-year yield is at 4.03. We got a bunch of macroeconomic data today. We're going to talk about that. But first, S&P 500 heat map shows NVIDIA is down 2%, Broadcom is down 2%, AMD is down 1%. And hopefully I have an article coming out on Supermicro that should be published tomorrow. And I will include the link in my YouTube description and post it on X as well when it's published. Tesla is up 2%. Amazon is up 2%. Eli Lilly up 2%. Everything else is pretty much mixed, except for oil companies are up slightly based on the oil price being higher. Let's read the daily article. Wall Street edges lower as markets await Fed rate decision, assess retail data. S&P 500 and NASDAQ were subdued in choppy trading on Tuesday as investors turned cautious ahead of an anticipated interest rate cut from the Federal Reserve on Wednesday and assessed the latest retail sales reading. Investors largely priced in a 25 basis point cut from the U.S. Central Bank at the conclusion of its two-day meeting on Wednesday to offset the deterioration in the U.S. labor market, evidenced by numerous recent economic indicators. U.S. retail sales increased more than expected in August. Data from the Commerce Department showed on Tuesday. We're going to dig into that later. Markets are still anticipating a total of 68 basis points in monetary policy easing by the end of 2025. Rate cut expectations remain unchanged after U.S. Senate confirmed economic advisor Stephen Miran to the Fed board, and an appeals court rejected President Trump's bid to fire Fed Governor Lisa Cook. Financial stocks weighed on the benchmark index, with the sector down 0.7%, leading declines. Losses in United Health and Microsoft weighed heavily on the Dow, with Dow Jones Industrial Average fell 210 points. 8 of the 11 S&P 500 subsectors were lower. An 8% fall in Warner Bros. Discovery dragged down the communication services sector. TD Cowen downgraded media companies' rating to hold from buy. Conversely, energy stocks advanced 1% based on higher prices. Tesla and Amazon lifted the consumer discretionary sector. S&P 500 and NASDAQ closed at record highs on Monday, helped by robust gains in Tesla and Alphabet, with the latter zooming past $3 trillion market valuation for the first time. Wall Street's main indices have gained so far in September. Among other stocks, Dave & Buster's Entertainment plunged 17% after the entertainment and dining venues operator missed analyst expectations for the second quarter revenue and profit. Trump said that the U.S. and China have a deal that will keep the short video app TikTok operating in the U.S. CNBC, citing sources, said Oracle will keep its TikTok cloud deal under the new agreement. It gained 3%. Webtoon Entertainment soared 28% after the online comics platform and Disney agreed to create a new digital comics platform to feature comic content from Disney's portfolio, including Marvel and Star Wars. Let's switch to Tesla. Tesla probed for potentially faulty door handles. The National Highway Traffic Safety Administration has opened an investigation into claims that Tesla's door handles become inoperable in certain situations on Model Y SUVs. We talked about this a couple of days ago. I also published a video on my YouTube channel discussing this topic. It's a very important topic. I think people should pay attention to it. The Safety Agency's Office of Defects Investigation revealed the probe on Tuesday after having received 9 reports from owners who were unable to get into their cars. ODI writes that the most common scenario involves parents who exit their car and cannot open the rear doors to remove their children. In 4 of those cases, according to the ODI report, owners had to break a window to regain entry into the vehicle. News of the probe comes a few days after Bloomberg published an investigation into a series of incidents where Tesla owners and passengers became stuck inside their vehicles following a crash. According to a preliminary review by ODI, Tesla's handles can become inoperable if the electronic door locks aren't getting enough voltage from the vehicle's battery system. But ODI also points out in its preliminary report that none of the owners who relayed this problem to the agency mentioned seeing low voltage battery warnings. Tesla's vehicles do have manual door releases, although they are only on the inside of the car. The door releases can be hard for children to access, and some owners aren't even aware they exist, according to ODI. It's possible to restore power to the electronic door locks, according to Tesla's owner's manuals, but it's a multi-step process that requires an external power source. Tesla did not respond to a request for comment. Obviously, this is a very important topic. It involves potential fatalities, and I wish that the CEO of the company would use this platform to spread awareness instead of tweeting about the stock price. But U.S. retail sales increased solidly. Headwinds from softening labor market loom. U.S. retail sales increased more than expected in August as consumers bought a range of goods and dined out. But a weakened labor market and rising prices because of tariffs pose a downside risk to continued strength in spending. The third straight month of solid gains in sales reported by the Commerce Department on Tuesday is unlikely to prevent the Fed from cutting interest rates on Wednesday, given the widening cracks in the labor market. It could, however, urge caution against aggressive rate cuts, economists said. Though sales were probably partially boosted by higher prices, the broad increase underscored economy's continued resilience despite mounting headwinds. The American consumer appears to be in good spirits, said Ellen Zetzner, chief economic strategist at Morgan Stanley Wealth Management. The Fed's main concern right now is a softening labor market, but more data like this could convince the committee that it can proceed cautiously on rates. Retail sales rose 0.6% last month after an upwardly revised 0.6% advance in July, the Commerce Department Census Bureau said. Economists polled by Reuters had forecast retail sales, which are mostly goods and are not adjusted for inflation, rising 0.2% following a previously reported 0.5% gain in June. Sales increased 5.0% on a year-over-year basis. Receipts at auto dealerships rose 0.5% after advancing 1.7% in July. The increase likely reflected higher prices and manufacturers reported a decline in units sold. Clothing store sales advanced 1.0%, while receipts at sporting goods, hobby, musical instrument, and bookstores increased 0.8%. Food and beverage store sales rose 0.3%. Receipts at service stations increased 0.5% amid higher gasoline prices. The government reported last week that consumer price increased by the most in 7 months in August, with strong rises in the cost of food and apparel, among other products. Online sales shot up 2.0%, likely boosted by back-to-school shopping after increasing 0.6% in July. Sales at electronics and appliance stores rose 0.3%, but receipts at furniture outlets fell 0.3%, while sales at building material and garden equipment retailers edged up 0.1%. Households also boosted spending at restaurants and bars. Sales at food services and drinking places, the only services component in the report, increased 0.7% after slipping 0.1% in July. Economists view dining out as a key indicator of household finances. All right. Inventories. U.S. business inventories increased moderately in July. U.S. business inventories increased marginally in July amid a surge in sales. Government data showed inventories rose 0.2% after advancing by the same margin in June. Commerce Department Census Bureau said on Tuesday. They increased 1.5% year on year. Okay. We're going to skip the rest of this one. A jobless expansion is the market's latest bull case as Fed rate cut looms. This is by Ali Canal. Takeaway from today's morning brief. S&P 500 keeps notching record highs even as hiring cools and unemployment rises. The curious case of a jobless expansion, as JP Morgan dubs it. The bet is straightforward. Weaker jobs push the Fed to cut interest rates, lower rates lift valuations, and slower wage growth fattens margins. It may sound counterintuitive. Rising unemployment and rising stocks don't usually go together, but it's not without precedent. Quote, "We have seen rising stocks and unemployment before," Piper Sandler's Michael Kantrowitz said, pointing to past cycles in the 50s, 60s, and early 90s when weak jobs pulled rates lower and fueled equity rallies. Goldman Sachs strategist David Kostin put it bluntly, quote, "A cooling labor market is a tailwind to corporate profits, all else equal." Well, all else is never equal in economics, though. So since wages, the biggest line item on most companies' balance sheets, are decelerating. In other words, what hurts workers can help lift stocks. I don't think this is a talks about the younger American employment numbers, high recent college graduates facing higher jobless rates. This doesn't seem very credible. All right. Fed convenes meeting with a governor newly appointed by Trump and another he wants to oust. So the Fed meeting started today, concludes tomorrow. We're going to get a decision and the conference call tomorrow. I might do a live stream of that. We'll see. After a late night vote and last minute ruling, the Fed Reserve began a key meeting on interest rate policy Tuesday with both a new Trump administration appointee and an official the White House has targeted for removal. Stephen Miran, a top White House economist who was confirmed by the Senate with unusual speed late Monday, was sworn in Tuesday as a member of the Fed's board of governors. He will vote on the Fed's interest rate decision on Wednesday, when the central bank is expected to reduce its key rate by a quarter point. Miran may dissent in favor of a larger cut. Also attending the meeting is Fed Governor Lisa Cook, whom the Trump administration has sought to fire in an unprecedented attempt to reshape the Fed, which historically is considered independent of day-to-day politics. An appeals court late Monday upheld an earlier ruling that the firing violated Cook's due process rights. A lower court had earlier also ruled that the President Trump did not provide sufficient cause to remove Cook. With both officials in place, the Fed's two-day meeting could be unusually contentious for an institution that typically prefers to operate by consensus. It's possible that as many of 3 of the 7 governors could dissent from a decision to reduce rates by just a quarter point in favor of a half a point. That would be the first time since 1988 that 3 governors have dissented. Economists also say that one of the 5 regional Fed bank presidents who also have vote on rates could dissent in favor of keeping rates unchanged. On Tuesday, the White House said it would appeal Cook's case to the Supreme Court, though it did not specify when. The president lawfully removed Lisa Cook for cause, White House spokesman Kush Desai said. The administration will appeal this decision and looks forward to ultimate victory on the issue. My ass. All right. India says trade discussions with U.S. positive, forward-looking. Trade discussions between Indian and U.S. officials on Tuesday were positive and forward-looking, New Delhi said, after President Trump struck a more conciliatory tone following punitive tariffs on India over the Russian oil purchases. A U.S. delegation led by Brandon Lynch, Assistant U.S. Trade Representative for South and Central Asia, met Indian trade officials headed by Chief Negotiator Rajesh Agrawal in New Delhi. It was decided to intensify efforts to achieve early conclusion of a mutually beneficial trade agreement. India's Commerce Ministry said in a statement without giving details. Talks covered bilateral trade ties, including a possible India-US trade deal, it added. Trump last month imposed a 25% punitive levy on Indian imports from August 27, doubling overall tariffs to 50% as part of Washington's pressure campaign on Moscow over its invasion of Ukraine. A planned U.S. delegation visit to New Delhi from August 25-29 was canceled after talks stalled, with India resisting U.S. demands to open its vast farm and dairy markets. India's exports to the U.S. fell to $6.86 billion in August from $8.01 billion in July. Exporters have warned the full impact of higher tariffs would be felt from September once new duties took effect. Rail merger warning, higher costs, worse service ahead. A coalition representing manufacturers and agriculture and energy producers warned federal regulators that the proposed $85 billion railroad merger will make it more difficult and expensive to ship by rail. The Rail Customer Coalition, in a letter to the Surface Transportation Board, STB, Tuesday said that Union Pacific's proposed acquisition of Norfolk Southern could compromise competition across U.S. freight rail network, increase costs, and worsen what it claimed are chronic service failures. Union Pacific and Norfolk Southern in July announced plans to consolidate in a deal that would create the first transcontinental freight railroad, a rail colossus operating 53,000 miles of track in 43 states. The RCC, which represents individual companies and trade associations, said its members account for more than half of the total volume of freight shipped by rail each year. It said a merger would leave rail customers with fewer options in an industry dominated by 6 railroads, controlling more than 90% of freight traffic. Past rail mergers have shown what happens when consolidation goes unchecked. Service suffers, costs increase, and jobs disappear, the RCC said in the letter. A transcontinental merger could spark a new wave of consolidation, leaving captive shippers with even fewer rail companies to choose from. This is in direct contrast to President Trump's executive orders aimed at promoting American prosperity, curbing anti competitive practices, and preventing monopolistic behavior. The shippers called for a thorough review of the proposed merger and for the STB to take meaningful action to enhance competition, service, and supply chain stability. The warning comes just days after Trump met with UP Chief Executive Jim Mena in the Oval Office. The RCC pointed out that STB's stricter rules adopted in 2001 require merger for enhanced competition. The shippers also quote on a consultant study that showed rail freight rates adjusted for inflation increased by more than 40% over the past 20 years, ahead of demand and operating expenses. Rail rates also increased by almost 70% more than truck rates in the same period, the group said, as mergers had reduced the number of large rail carriers from 23 to 6. I mean, that's an important statistic right here. Rail rates have increased by almost 70% more than truck rates in the same period, 20 years. That's notable. Oracle stock jumps as US China agree to preliminary TikTok deal. Oracle stock rose as much as 5% on Tuesday as the US and China reached a preliminary TikTok deal during the trade talks in Madrid. Treasury Secretary Scott Bessent said at a press conference Monday that the two countries have agreed on a framework for a deal. Trump and Chinese President Xi Jinping are set to speak on Friday to complete the agreement. While the US buyer of TikTok has not been named, Oracle has emerged as a top contender to acquire the social media app. CBS News reported Tuesday that Oracle will be among a consortium of companies that are part of the preliminary US China deal to enable TikTok to continue operations. Meanwhile, CNBC reported that the two countries' agreement would allow Oracle to continue its current deal with TikTok. Oracle servers are used to store TikTok's American user data, part of an initiative called Project Texas, launched by TikTok around 2022. Shares in the tech firm had spiked as much as 5%. Oracle has worked closely with the Trump administration on its push to develop AI in the US. The tech firm's chair, Larry Ellison, joined OpenAI CEO Sam Altman, SoftBank Group CEO Masayoshi Son, and Trump in January in the Oval Office to announce a $500 billion initiative called Stargate to build AI data centers in the US, though the project has faced delays. While Oracle has emerged as a leading contender to acquire TikTok, other suitors have also expressed interest in buying social media company from a group of investors led by billionaire Frank McCourt Jr., Microsoft, YouTuber MrBeast, and Perplexity AI. Interesting. We're going to read the summary on this one. Gold rises above $3,700 for the first time on Fed rate cut optimism. Gold prices reached a record high above $3,700 an ounce, driven by investor optimism for a U.S. Federal Reserve rate cut and potential for further monetary easing. Weak labor data, President Trump's pressure on the Fed, and geopolitical uncertainties have contributed to gold's surge, which has outpaced major assets this year. Interestingly, gold, I think, has been returning better than Bitcoin this year. So that's interesting development. And let's read the summary on this one as well. Texas AG probes proxy advisors Glass Lewis ISS amid ESG backlog. Texas Attorney General Ken Paxton launched an investigation into proxy advisors Glass Lewis and ISS, alleging they misled investors and companies. The investigation, part of a broader Republican campaign against ESG, focuses on whether the firms violated consumer protection laws. And on that note, thank you very much, everybody, and I will chat with you all next time. Take care.